Hooty hoo, all my stock market gamblers. Welcome today. I'm Tall Mike. So glad you're here. So what do we got going on in the markets today? Well, the Dow's up a little bit, up about 80 points. Nasdaq's down a little, down about 20 points. The market, though, has been all over the place, up and down, up and down. A lot of volatility today. Now, today's the first trading day of March. We had a lot of volatility in February, and that volatility is going to continue on through the month of March. Now, we had that run up in January. We had the pullback in February. So where's the market going now? Well, I still think we're going lower. I still think we're going to take out those October lows. Now, why do I think that? Well, markets never bottom out in the middle of a Fed tightening cycle. The Fed is still raising interest rates. Now, they did back off a little bit. They were raising 25 basis points, but they know that inflation is still here, and they'll probably raise 50 basis points the next time they meet, which is in 3 weeks from now. So the Fed tightening cycle is still in play, which means we haven't bottomed yet. So the bottom is not in for this market. Now, mark my words, just because I think we're going lower, just because I think we're taking out that October low, we can still have a rally from here. We're at an area right now where there's a lot of support. Look, at the Nasdaq is right on its 200-day. The S&P is right on its 50-day. It's getting a lot of support. So we could see a 100-point rally in the S&P right here. We're sitting about 39.50. We could go up to 40, 50, 100 points before we head lower. But we're going to head lower. Yes, we're overdue for a little bit of a bounce, and that probably will happen, but not necessarily. But what will happen is eventually we'll head lower to take out those October lows. Once again, just my take on the markets. You may have a completely different take, and that's perfectly fine. So let's get over to the real estate market. Now, the real estate market, once again, I think the real estate market is still coming down. Now, a lot of people said we had a recovery in January. I didn't notice the recovery, but that's okay. But I feel that the sellers of their homes, they're still in denial. They're in denial of what's coming. Now, a lot of sellers, they're waiting for the prices to rebound. They think that the Fed's going to pivot. The Fed's going to, reduce interest rates, which will bring mortgage rates down, and that will send their house higher. I don't see it that way. Look, at the recession's coming. We're already getting a lot of layoffs, right? And mortgage rates are not going down, but they're actually going up. So I think that if you just hold off until maybe towards the end of the year, you're going to see a real estate market that is in full-blown crash mode. That's just my take on that. Okay, you see, houses are still way overpriced. Now, what I want to talk a little bit today about is, well, I want to talk about Ray Ray. We talk a lot about Billy Bob on this program, right? Everybody knows Billy Bob got out at the top. But who did Billy Bob sell to? Well, he sold to Ray Ray. Now, I want to talk a little bit about Ray Ray. Okay, so there's a lot of Ray Rays all across the country. Of course, not in your area. Your prices are still going up. But in my area, I'm going to talk about what happened with Billy Bob and Ray Ray. Now, Billy Bob sold his house to Ray Ray. Now, Billy Bob met with the real estate agent. They told him to list his price. Now, in my area, prices are very expensive, but they told him to list it for $2.5 million. Okay, so Billy Bob listed it for $2.5 million. But what was happening when Billy Bob listed it for $2.5 million? Well, there was the FOMO bubble. Everybody was bidding prices up higher and higher. Now, to prove this to you, I got a couple flyers here. Now, this one, okay, look, this house sold for $3.1 million, $202,000 above the asking price. Okay, here's another one, right? Here's another one. Okay, so this one sold for 1.8, $370,000 above the asking price. This one sold for 1.5. But it was $500,000 above the asking price. So this is back in the days where the FOMO was there. There was a lot of FOMO in the market, and people were coming in and they're just throwing money at it. They were bidding the prices up. up. So Billy Bob listed his for $2.5 million. Okay, well, what happened? Well, he got a bidding war, and he accepted the highest bidder, which was $2.8 million. Now, that bidder happened to be a guy named Ray Ray. Ray Ray bought the house from Billy Bob for $2.8 million. Now, what's happened since then? Now, that was about a year ago now, almost a year ago. Not quite, but almost. Okay, so Ray Ray bought up here at $2.8 million. Well, the next guy saw that Ray Ray got $2.8 million. He put his on the market for $2.5 million, hoping for the same bid up. Didn't really happen. Now, he did get his asking price. He got 2.5. Okay. So what happened to the next guy? Well, the next guy's going, oh, the real estate agent's going, well, they're a little bit lower than where Billy Bob got out at. So he put his house on the market at $2.2 million. But he didn't get $2.2 million because there's no more buyers, no more bidding war. He only got $2.1 million. Okay, now remember, Ray Ray, he paid $2.8. Now, these are all the exact same house. These are all the exact same floor plan. Not the exact same house, but the same floor plan. You know what I mean. Anyway, so they're exactly identical. These are tract homes, and they're only about 1,400 square feet, right? Now, this is right next to Apple Computer, a lot of money there, and they come in, they buy these houses. But right now, you could go and buy one of these tract homes. Right now, it's sitting right down the street from me at $1.9 million. Okay, so $1.9 million. It's not sold yet. Maybe it gets bid up. I don't know, but it's for sale for $1.9 million. Okay, and they're hoping to get that. Okay, so but Ray Ray bought up here at 2.8 for the same house. Now, do you think that Ray Ray is sitting there going, yippee, I'm so lucky. I got in at 2.8. And I got a 3% mortgage rate. These poor guys buying now for 1.9, they have to pay 6% mortgage rate. Do you think that's Ray Ray's attitude? Well, let me tell you, I don't think that's Ray Ray's attitude. I think Ray Ray's like, oh crap, I just made one of the worst financial decisions of my life. I way overpaid for this house. But it's worse. Ray Ray, he never got an appraisal because he waived that. But he never got any home inspections. Now, in this last rainstorm, now this was sad. I saw Ray Ray out there with the roofers. He was on top of his roof. Apparently, Ray Ray has a leaky roof because he didn't get any inspections. Ray Ray needs a new roof. So there goes another 20 grand he's got to come up with to get a new roof. Ray Ray's got some problems. Now, do you think Ray Ray's really happy? Let's say Ray Ray, something changes in his life, right? Let's say Ray Ray gets transferred to New York for his job. And Ray Ray's got to sell his property. Now, when Ray Ray bought his property for $2.8 million, he put $500,000 down. $500,000 Ray Ray put down. So he owes $2.3 million on the house. But he can only sell it for $1.9 million right now. And that's if he gets lucky. That's if he finds a buyer. So if he had to sell, he'd have to come to the closing table, not with the $500,000 that he put down. He'd have to go get another $500,000 just to get out of the property. You see, Ray Ray paid 2.8. It's at 1.9, but it's going to cost him $60,000, $70,000 in fees to sell that place. So he's going to need about another $500,000 just to get out of the property. Now, do you think this is making Ray Ray really happy? Now, you know what's fascinating? I didn't mention this, but that house that's for sale for $1.9 million is Ray Ray's next door neighbor. Now, how long do you think Ray Ray's going to keep paying on his $2.3 million mortgage when his next door neighbor's house is going for $1.9 million? Now, Ray Ray can just hand those keys back to the bank, and the bank would have to be the one taking the loss, not Ray Ray. Well, Ray Ray's going to lose his $500,000, but the bank's going to lose another $500,000 because they made the loan to Ray Ray. Do you see how this circling the drain works? I mean, when you're stair-stepping down, but there was that FOMO that pushed these houses. There was no way in the world that a 1,400 square foot tract home is worth $2.8 million in Cupertino. It's just not. It's not worth it. Now, the prices, they'll tell you they are. Okay, they'll tell you that they are. They'll tell you, oh, yeah, that's what they sell for. No, that's not what they're worth. Might be what they're selling for, but they're not going to stay there. Look, we're next to Apple Computer. And Apple Computer, here's an interesting thing. Okay, so Apple Computer, right? They got all these people that work there. And if you don't want to commute, you want to live right where I live, which is close to Apple Computer. And in 5 minutes, you're into work, right? Okay, well, Apple Computer pays their people a lot. They pay them, $300,000-$400,000 a year. And when you got two people, husband and wife working, you're able to afford the $2.5 million house. Okay, but here's the thing. So Apple Computer says they're not laying off people yet. Well, not yet. But here's what they're doing. Okay, I have a lot of friends that work at Apple, and a lot of them are not Apple employees. A lot of them are what are called contractors. They are contractors. Now, Apple Computer got in trouble for this many years ago because they had all these contractors that they were treating just like employees, telling them they had to be in by 8, couldn't leave till 5. They had to do everything they told them to. They were just like an employee, but they would call them contractors because they didn't want to give them the benefits, right? So what they got in trouble for. So now the employees, if they want to become a contractor, they have to start a corporation. They have to incorporate themselves. I could go and become a corporation, Tall Mike Incorporated, right? And then I could go apply at Apple and they could hire me as a contractor because I'm a corporation doing work for them. Well, they're laying all of these contractors off. Okay, that's the people they're laying off. And that way they're saying, well, we're not laying any employees off. But they're laying thousands and thousands of these contractors off. So these people that were buying these houses for $2.8 million, well, they don't have jobs anymore, so they're not buying them. Now, look, there's a lot of lessons to be learned here. Okay, Ray Ray paid $2.8 million. It's down to $1.9 million. Now, here's the thing. Here's the lesson. Okay, Ray Ray's property tax is $3,000 a month. Let's figure $35,000, $36,000 for the year. Okay, that's Ray Ray's property tax. Now, if the person comes and buys a house next door to Ray Ray, same floor plan, buys that house for $1.9, their property taxes are $2,000 a month, or about $24,000 for the year. So this property tax doesn't change, right? So as long as Ray Ray stays in that house, he's going to be paying another $1,000 more than his next door neighbor's paying. You see, if Ray Ray had just waited, just sat on his hands and not done anything, just got some popcorn and watched the show, he could have saved $1 million, right? Off the price of what he bought the place for. So he'd have an extra $1 million in his pocket, and he would be paying $1,000 a month less property taxes, or $12,000 a year less property taxes, right? Okay, so that's a big lesson. It's much better to buy at a lower price than to buy at the higher price. Even if the mortgage rate is more money down here than it is up here, it's still better to get the house at a lower value because of property taxes. Okay, here's another interesting lesson, right? All right, Ray Ray bought at $2.8 million. Okay, and there's about 100 homes on the street, let's say. And now these prices went from 2.8 down to 1.9. I'm just using rough numbers. So basically, they've gone down $1 million. Now, did everybody sell? Is that why they're down $1 million? No. 3 people out of the 100 sold, and it dropped the price down $1 million. Look, you can have a housing market crash, as I call it. A lot of people go, Mike, it's not a crash. We're only down 10%. That's not a crash. Look, housing's going to take time to come down. It's going to take time. Doesn't happen overnight like the stock market. I keep telling you that. People leave comments all the time. I've been watching you for months. You say the same thing. Nothing's happening yet. It's happening. Believe me. You tell Ray nothing happened. Ray is one depressed little person right now because he made a bad financial choice. I don't want you making the same bad financial choice. Now, I know in your area prices are still up here, right? But eventually you're going to see this downward slide that we're getting. This is going to move its way all throughout the country. Now, you may not believe that, and you can go out there and buy. Go ask your local realtor if it's a good time to buy. He'll tell you absolutely a good time to buy. Well, I don't see it that way. I have a different take on the marketplace. Maybe I got it all wrong, but I could have saved Ray $1 million. I could have if I was his agent. I would have told him to wait. Wait, Ray, wait. Anyways, if you like this stuff, give me the thumbs up. Why not? I'm Tall Mike. Get out there, everybody. Have a great Wednesday. Hit that subscribe button. I want to talk to you more later in the week. Bye-bye now.